that are under monetized. And I think there's still a lot of value there.
All right, let's bring in Loop Ventures founder and Fast Money friend Gene Munster for more on this. Gene, great to have you with us. I think the last time we spoke about Facebook, it was just on the heels of a lot of big brands joining in on this ad boycott. Now with these groups walking away from this meeting with Zuckerberg disappointed, is this problem much worse in your view?
It is. I think it underscores the context of these three waves that are coming at the company, and maybe even taking a step back, why the meeting was a disappointment today is a good place to start. Facebook was well aware of what the topics were going into the meeting. The reason why it did not produce any substance is that if it did, it would lure them more into being a publisher, and that, of course, brings with it regulation. That is the second wave that this company is going to hit. That could be months away or over the next several years. The first wave is the boycotts. I mentioned the second wave around potential regulation. And the third is potentially antitrust, how it bundles its products. For example, Instagram would not be Instagram if it wasn't for Facebook. So when I think about the context of the news today, what is to me most significant is reading between the lines, and that Facebook understands the amount of pressure on this company is hard to put adjectives around it, but yet they don't make any moves. And the reason is they understand the chess match that is being played here and what the long game is, and they ultimately need to successfully navigate that. And so I think when you put all this together, it's currently a $650 billion market cap. It's near its all-time high. It is a business that has one platform that's over half of its revenue, Facebook, that is arguably toxic. The second, Instagram, which is you could build businesses on top of it. There's some good that comes along with that. But I think when you put all those elements together in these three waves that are coming at the company, it's hard for me to envision a scenario where the stock continues to outperform.
So, Gene, let me give you the fourth wave, potentially the fourth wave. Obviously, ESG investing really crippled a lot of these energy companies clearly at the wrong time in their history. Is there a chance that Facebook, which in, I think, 220 or so ETFs, 170 of which have Facebook as one of their top 15 holdings, if ESG comes into the equation, how potentially damaging could that be to the stock?
It would be as damaging as being removed from the S&P 500. And so I think that it is material. I think that that risk is, in fact, a fourth wave, and one that has rarely been enumerated in all these conversations, but is something that will become a bigger topic. I can share this much, is that internally, as we think about our research and we think about the future and think about where Facebook and social plays into it, that topic in terms of socially proper investing, and particularly Facebook and Twitter, has been an internal topic for us. So I'm sure that it is quietly going to emerge as that fourth wave.
Gene, it's Karen. Let me ask you something. So given your hesitation and concerns about Facebook, where do you think the stock should be trading? I am somewhat reluctant to put an actual target on it, and part of the reason is that it's up to investors. It's not a convenient answer out of that. I'm an industry analyst, industry observer, longtime tech person, but I think that it's hard for me to envision that with all these headwinds that the multiple continues to be where it's at. And so, Karen, unfortunately, the best answer I can give you is at where it is today or lower in the future.